LAProbateExpert.com, and this is our Tuesday afternoon 3 p.m. real estate investing Zoom.com, where we go over real estate and try to help new investors get started, new people looking at the business, make some money, and people who have some extra money create wealth. And I think those are two distinctly different activities depending on where you are in your career that you want to focus on. I just last week was in Aventura, Florida, just north of Miami, with Grant Cardone at the 10X Real Estate Bootcamp. Carolina was there with me. How you doing, Carolina? Nice to see you again, as always. From New York City, big-time investor out on the East Coast, doing some big stuff. And one of the things I got really clear on that was the distinction between income and wealth. And as a real estate professional, I work every day hard to make income enough to live on an extra and take the extra and put that into my wealth building activities. It's supposed to generate more wealth in the long run by working as hard as I do, generating income. And sometimes people get confused and they start their career thinking they're investors when in reality, you're trying to generate income from your business and you have to spin it off and make enough money to get into the business.
02I7 ID3A.
Okay, there we go. We got somebody there sharing with us some good information, but not quite what we're looking for. Okay, good. So I wanted to share today, just before we got started, some very interesting statistics. I think that when people say, "Well, how's the market?" I think it's always a conversation starter whenever you talk to people about real estate. And again, we should always be looking for deals. We always want to be talking to people about real estate, and so being able to talk about it intelligently and share information is really important. This report that I get from the multiple listing service, I belong to the MLS.com, or otherwise known as the Combined LA Area West Side Multiple Listing Service. And they do a report regularly. I'm going to kind of highlight a few parts of it. Number one is the market climate for single family homes this quarter versus a year ago. So when you look at this information, you're going to see that mostly it's red or pink, right? And so if you look here, it tells you what the percentage change is year over year. Now this percentage change is by activity, not by, I'm sorry, by, that's not right, by market price, right? Let's see, percentage change. Yeah, so you're going to see that the red areas are over a 30% increase. And then it goes down 20, 11, 10, and then blues, you're getting down to a decrease. So what do you guys notice of the map? If I said you describe overall the colors of this is the Los Angeles West Side area, how would you describe the colors of this map? Anybody?
Deep red into pink.
Deep red into pink, excellent. And so deep red is going to mean that what? We're going to have dramatic increases in activity, dramatic increases in price, and pink maybe a little bit less. Jason, I don't know why you can't hear anything. I believe my audio's working. You can see in Beverly Hills Post Office, Hollywood are blue, decrease. Black means there's not enough data. You can see downtown LA, slight decrease. And you can see in Chevy Hills, which is a very high-priced area per square foot, probably similar to Beverly Hills, up in the hills especially. So it's interesting, there's a few areas that aren't quite there. So imagine if you're a homeowner in Chevy Hills and you think the market's gone up 20% year over year, but in reality, in your market, maybe it's gone down, right? And this breaks it down a little bit more by areas. So the next thing I wanted to show you was, this is by volume. So this sheet is by price. This next one is single family homes by volume. You can see overall everywhere almost, the volume is up dramatically. And in Inglewood, it looks to me like it says up and then its color is gray. So I'm not sure what that means. But you can see throughout Southern California, the volume is up red, meaning by a 30% increase in sales volume. Now sales volume is units times dollar amount. So it's both factors combined. So if the price of the house went up 20% and the sales went up 10%, you might have a 30%, not together, but about a 30% increase overall. Now, here's an interesting statistic. This is something to be careful of in this market. Let's talk about condos. So the condo median price, you can see from 19 to 20 to 21, actually the median price actually went down in LA for condos, though the sales volume is way up. Number of sold's way up, right? But it's very geographic. Take a look at this map. How do we describe the colors here? Anybody?
It's mixed or modeled.
Mixed. Mixed. You have some reds, you have some blues, you have black means not enough data. So really mixed. And so again, if you own a condo, you might think, hey, we're in a historically hot market. And in some areas, you're correct. But in a lot of areas, the values actually went down or were flat. And so this is where as an investor or looking at deals and comping deals, I have to be a little careful because sellers want to believe everything's gone up, including their house, but in reality, it may or may not have. And I thought I would just show while we're here in the neighborhood. So that was the median price, but the sales units are way up. So isn't this interesting? You have areas where the sales is up, but the price is down. So you can just see overall, we've had a surge of activity and volume and a significant increase in prices, and yet the values didn't translate overall in condos in particular. So again, there's something to pay attention to there. So it's really important that when you look at the marketplace, you don't just get one statistic from MSNBC saying the market is hot or the market is cold. Real estate is hyper-local. It's not even just condos in LA or condos in that neighborhood. Within that neighborhood, there's the high and the low market. And in some areas, the high price is doing better. In other places, the low price is doing better. As an investor, we have to really break down those numbers and find where the opportunity is for us to make money or for our client to make money. So any questions on that? I went that fairly quickly, but any questions on that? No? Okay. Well, anyhow, this is from the MLS.com. I think they put this in the newspaper and online, various sources, and something that's publicly available. But as a member, I wanted just to share that with you guys to show you what I think. My goal of that was just to say the market is varied. It's not locked into one thing. I think we think overall the market is the market. And the reality is the market is a combination of many markets, this just being one of them. Okay? And there's the lesson for that. Okay, where are my controls here? Oh, there we go. So we're going to stop this share. Okay, good. So I have some things I want to share today, but before I go any further, boy, we've got a lot of people piling in here still. Wow, fantastic. Anybody bring any questions to start with or any deals that they'd like to present to us today? Hey, Nick, nice to see you. Anybody have any deals or any questions I can help you with real quick before we get started? No?
Hello.
Hi, Angela. How are you?
Good. I'm in the kitchen trying to do some things, multitasking, but I do have a property that's coming up in Vista, California. It's 1309 Ridge Road. I'll put it in the chat. It's on the MLS. It's coming soon. It's an acre property, 3-bedroom, 2-bath, and no HOA. It's south of the 78. So the comps on it are, there's one that just sold at 905, and this is going to come out at 765. So it's a good fix and flip. It's got room for toys, RV. So if anybody's interested in that, I'll put it in the chat. And we will be having another one that's going to be a complete rehab in that same area, same size property, but at a lower price in the future, probably within another month and a half. Okay. Thank you.
Well, thank you for sharing with us. In the future, feel free to email me if you have a sheet or something that we can put online and people can see it as well. It makes it a little easier to share and talk about. So good. Okay.
Bill?
Yes.
Gary Payrow.
Oh, there you are, Gary. How you doing?
Good. I am making a loan on some real estate, and I had some notes from an excellent training that Bill Tan from the LA Rio in San Gabriel Valley. He had an excellent training, and I can't find my notes. And so if anybody has, just sort of like a cheat sheet on, best things to put into a note from a promissory note from the, lender's point of view, if you could send it along to me, I would appreciate it. And I'll put my email address in the chat.
Sounds like a plan. If you have that information, talk to Professor Cashflow Gary Payroll.
That's right.
Oh, that rhymes. Professor Cashflow Gary Payroll. I just realized that.
Maybe that's why everybody always called me professor. I don't know.
Uh-huh. Okay, Professor Cashflow. Very good. Okay,
Dr.
good.
Payroll, they call me. Anyway, thank you, Bill.
Very good. Okay, so one of the things that I learned when I was at the Grant Cardone boot camp, one of the things he struck and he emphasized over and over again is everything is about the deal. It's all about the deal. And I think I'm just curious if you put in the chat box or if you want to raise your hand, how many of you are brand new? You've never done one investment before. You've never bought one property on your own, but you're looking to do that and get started. Who here falls as a new investor or want to be involved with an investor? I see one hand up, Christian, fine. Dimitri, fine. I see a couple hands up, fine. Okay. Who here would consider themselves an experienced investor? You're always looking for deals, and you're here today maybe trying to find one, but you do other things as well. Who would that be? Experienced investor. Okay, Gary, I see not as many. Look, and the truth is that those of us who are experienced investors need the new ones as well. We want to work with you, help you get your first deal. But sometimes you have to bring a deal to somebody who can help you through the process. I want to share with you today, one of the things that's important is knowing what the priority is and what the process looks like in buying a deal. And so Grant Cardone went through the priorities of getting a deal and getting paid. And so he made a list, and I'm going to go backwards, bottom to top. Number 8 is selling the deal or refinancing. So at the end of the deal, you either sell it and get paid, or refinance and pull cash out, and then hopefully get paid in the cash flow as it goes on. That's the last step of the process. 7 is adding value to the property. Most of the time, if you buy something, you need to do something to fix it up. The current owner doesn't see what they can do or doesn't want to be bothered with it. And you might repaint, carpet, upgrade cabinets or something, adding value, being able to raise the rents and make the property more valuable. Number 6 in the list he gave was negotiating the deal. So you have to learn how to negotiate. You have to learn in a way to make the other party feel that they got a deal. Negotiating is not beating people in submission. More often than not, negotiating is finding a way that both parties feel they won on that transaction. And that's how deals usually fix. My experience is if you negotiate a deal and the other party feels browbeaten into the deal, they're going to find some way to back out or sabotage it along the way. Number 5 is clarifying terms. It's important that at some point you have an offer and you need to clarify what all the terms are. And before that, number 4 is writing a compelling offer. You have to learn how to make your offer stand out from the competition. So for example, I have a client who's selling a house in the city of Yorba Linda. And the neighbor wants to make an offer on the property, and they write it up, but instead of they use a lender who gives them a, quote, pre-approval letter. But when you read the letter, it's clear that they're not pre-approved. The lender hasn't even looked at their tax returns or their bank statements or really anything other than the customer said this is what they make, and we'll pretend that they do, and we'll lend it based on that, which they're not going to lend on. As opposed to actually getting pre-approved with the lender. So the lender says, we've already reviewed the income, we've already reviewed the credit, we've already reviewed the assets. All we need is a property and a contract, and we're ready to lend. And so you want to make your offer as compelling as you can. That's number 4. Number 3 is communicating with the broker or communicating with whoever has a transaction, the seller. In most cases, it's going to be a broker. Most deals you get are probably going to be on the MLS when you become a full-time professional investor. Now, as a brand new investor, you might find a property off market through friends or family. But communication with the party is critical. Number 2 is underwriting the deal. Meaning people will present you a transaction all the time. But is there a deal there? Is there a way to make money there? You have to learn how to evaluate deals. So when somebody says, well, I'll sell my property for $1 million, there are people who will tell you, I'll sell my $20 bill for $21. Who here is going to buy a $20 bill for $21? Anybody?
Depends on the terms, Bill.
Okay, cash money, I'll sell you a $20 bill for $21.
Nope.
Versus who would buy a $20 bill for $18 on a cash deal? We all would, right? We buy as many as we can. So you have to underwrite the deal and see if there's really a deal there or not. Sometimes the deal sounds like a deal, but when you go a little deeper and find out, there's conditions, there's terms, there's value. You can't add on for some reason. And oftentimes people will call me with a deal where it's priced so high, even if I bought it, I couldn't resell it and make money on it. So I always ask people two questions when they present a deal, which is one, what's it cost to get into the deal? Down payment, closing costs, if it's financeable, what's the monthly costs? And then two, what do I get out of the deal? Am I making money on it by flipping it, or am I getting cash flow as a result of it? And as a salesperson, you have to answer those two questions. Here's what your investment is, and here's what your return is. And I think you would make those numbers both clear. You could buy this property with 30% down for $150,000, including closing costs, and you'll get a return of 4% in your cash plus appreciation. Now, does that sound like a compelling offer? To some people it is. To some people it's too low. But at least somebody can evaluate it right away. So that was number two. Number one is the real estate is always senior. The real estate, the deal is always the most important thing. And so when you talk about a transaction, you want to know, is there money being made on this? If there is, you do whatever you can to make the deal work. You get it tied up, you get it in the contract, you'll find, if there's a good deal, then here's what I want to tell you. I say this all the time, so forgive me if it's repetitive to you. But I'm reminding myself, I've been in this business since 1986. There has never been a time like this in my career where it's easier to make money or build wealth. There has never been a time where if you have a deal, there is money to buy it. If you have a deal, there's money to finance it. That was not always the case. But I guarantee you today, if you find a deal with a reasonable profit margin on it, somehow, some way, you can get it financed, get it closed, and make money on it. I promise you. I've never seen it like this before. Okay, so covered those things. That's the whole process. So again, what was the number one thing? Just real quick. Anybody? What's number one?
The seller refinance.
No, number one.
No,
that
the
was
property.
The deal is a deal.
The deal. Okay, everybody repeat after me. The number one thing is the deal. Ready? The number one thing
The
is
thing is the deal.
the deal.
The deal.
It's all about the deal. You got to find a deal. I get people call me off of this phone call, and I'm glad to take your calls and help you if I can. And I get called about once a week where somebody says, I'm looking for a investor-friendly closing service. Usually I say attorney. Now in California, we're a little different than other states. We took the job of attorneys in other states, or even here on big transactions, where attorneys are used as an intermediary between the buyer and seller. The buyer puts the money with the attorney, and the seller puts the documents, and the attorney switches them, gives the buyer the property, gives the seller the money. More complicated than that, but that's a way to think of it. The attorney's like the middleman. In California, we took just the piece of attorney that does that, and we create another entity called an escrow. So an escrow officer is really, in other states, is the attorney, or in other states they call them closing attorneys. But all they do is transactions. And people call me and say, hey, I'm looking for an investor-friendly attorney. I know right away they went to a seminar. The seminar didn't teach them about California property, but more importantly, you don't need, on the list I gave you 1 to 8, when do you need to worry about the escrow or the title or the attorney? What stage, 1 through 8? With a deal, no. Underwriting the deal, no. Communicating with a broker, no. Writing a compelling offer, no. Clarifying terms, that's what number 5. You don't need to worry about that to number 5. What's the number one thing you have to worry about? Anybody? What's the number one thing focusing and making money in real estate?
Price?
No. The deal.
Getting it under contract.
The deal.
Buying right.
Well, buying right, but if it's buying right, then it's a deal. If it's not a deal, then it's not a deal. So the number one thing is the deal. I don't know if I can say that again. The number one thing is the deal. Okay? And so you have to make sure that you focus on that. And as you start off, I always feel like you're like an airplane on a runway. When you start in this business in real estate as a sales professional, as an agent, you're going to start as a wholesaler or a bird dogger. Think of yourself as an airplane on a runway. You have so much runway to start making money to get off the ground to build your business. And you have to spend all your time on that runway building speed, which is building your business. And how do we build a business? What's the number one thing?
Finding the deal.
Finding the deal. The number one thing. And so you got to look and find the deal. Now, here's a question. Who here has bought a real estate deal they found was a really good deal?
Say
Who
again?
here has bought a real estate deal, an investment that was a good deal? Besides me. Angela, where'd you find it at?
I have.
Local,
What's local mean?
within 10 miles of my residence.
How'd you find it?
Hunting,
What'd you do to hunt to find
driving.
it? Okay. So you drove for
I
dollars, or you
also
drove and found the
one,
property
my current one I found on the MLS. So
on the MLS. So here's what I would say. When I ask investors about deals, and they're always a little hesitant to say that, to admit this, 80% of the answer is it's on the MLS. Now, saying it's on the MLS is like finding a diamond in a diamond mine. There's a diamond, there's a lot of dirt around it. And so you have to learn how to search through it and find the property. You have to learn how to negotiate the properties. But the number one source is the MLS. The problem is it's so vast, it's like looking at a diamond mine from the top, doesn't look like there's any money there. But to an experienced miner, they know to dig and sort through the dirt to find the diamonds. The MLS is the same way. And so for those of or realtors, we need to learn how to sift through. I sift through the MLS by looking at probate properties, for example. I'm not saying it's the only way to do it. It's just one that I've worked on. I know guys who used to spend every day, 2 or 3 hours in the morning, every day, pulling up new listings. And he worked on specifically fourplexes in a certain geography. Every day there's 2 or 3 new listings. He'd run the numbers. If it was a good deal, he'd run out and make an offer on it. And he would write offers, I think, 2 or 3 days a week. So you have to have your way of finding deals. It might be driving for dollars. It might be going to real estate investment clubs like this and networking with people. It should include emailing out to your past client database. It should include looking for deals in your sphere of influence. I know a guy who wears a hat. We buy houses all the time. We see people's shirts. We buy houses. You're not going to make a living off the hat and the cap, but it's going to get out the message to more people. Okay, it's going to go live. Okay, thank you for the info on that property. Let's see detail of lender-friendly terms to have a promissory note. Okay. I'm not sure I can help with that. Interesting. Okay, Paul, thanks for the information. I guess there was somebody who got COVID at the event in Florida. 2,000 people in a room, no mask. So if COVID's it was real, I would have expected somebody to get it, but thank God it wasn't me. So, okay. So, how do we find deals? So, number one is the MLS. Number two is driving around. Anybody else ever buy a deal that they made money on?
I did. I bought it through a wholesaler.
Through a wholesaler. Okay, here's a good one. Are there some wholesalers on this phone call? Yes. And how else will you find a wholesaler?
Facebook groups.
Facebook groups, very good. So, good. So, a couple other options. Social media groups, real estate investment groups. Who here belongs to a real estate investment group? Anybody? Yeah. I go to one on Wednesdays at noon, Prosperity Through Real Estate. Prosperity Through Real Estate. And there are people that I've met as a result who have I've done deals with. I've made a lot of money from the people. I wish that used to meet live. And unfortunately with COVID, now it's online, not quite as effective. So one of the things that Grant Cardone said, as far as where and how to find deals, he made a list. One of the things he said was that you should look and underwrite 2 deals every day, 2 pieces of property every day. Doesn't mean that you're gonna find 2 good deals every day. That means you'll look at 2 deals, run the numbers and see if they're a good deal or not every single day. He does this. Now he taught us kind of his method for the properties that he's looking at. He's looking for a specific type of property, not appropriate for most people on the phone, on this call. But if you're in this business and you're full time, and I've started this habit myself. Every day I go on the MLS. There's a certain kind of deal I'm looking for. I pull up 2 deals and I run the numbers real quick and say, are these deals or not? You got to look at deals and run the numbers and sift through them quickly and see if it works or not. Every day. Second, there's third-party resources you can use, such as LoopNet, CoStar, the MLS, NHMC for multifamily properties. Number 3, he also says watch sold properties. How else can you learn the values of what's a good deal or not unless you know what's really selling and what the real price is that it closes at. So one thing I do, I'm a member of the MLS, but whenever I offer on a property or I talk to a seller, I create a search on that property. And so if I talk to them and a week later they list it, I see it. Or if I made an offer and they didn't pick my offer, I'll see it. It goes pending. Then it falls out of escrow. I'll call right away. Right? So if you're in the MLS, if you're an agent especially, or if you're working with an agent, make sure they create a search for your property that you're looking at. Oftentimes, the deals you're going to get will have been in escrow with somebody else and fall out, and you're going to be Johnny on the spot to get the deal right away. Right? So that was number 3. Number 4 is you can search local and city and county records by specifications. You can get public record data from a title company, and if your goal is to pick up certain kind of properties with ADU and put ADUs on them, you might want properties greater than 5,000 square feet, living space less than a certain amount, whatever your numbers are, and door knocker market to that group of properties, right? So there's county and public record data you can get, and then sift through that to find the niche that you're particularly looking for and contact them directly. He also said deals under contract. Now, if you happen to know an escrow officer or a title officer or a loan officer, you want them to call you if a deal's falling out of escrow, right? And the few times I've double-ended deals where I'm the listing agent, I see the buyer starting to waver, and I'll call around and try to get the next buyer lined up and ready to go. So we cancel, put in a new buyer, and close right away. Who would like to be that phone call? Hey, this deal's falling out. It's a good deal. I can put you in it. Right? The first house I ever bought was the same Diamond Bar. I was a loan officer for one of the top agents in the city. She was selling her house to buy a brand new house. The people buying her house had to sell their house. She called me and said, hey, these guys are buying my house. They're going to put it on the market. If you're interested, make an offer right away. You can get it locked up. We bought a property. We got into contract for $142,000. We had to wait 9 months to close because the down leg, 2 legs down, was a new home being built. So we rented for 9 months waiting for a house to be built. We moved in our first house. A year later, after we closed, we sold it for $242,000. So we made $100,000 in a year on that property. We probably put 10% down. So I put like $14,200 down, and I got back a check for about $115,000 cash. How good is that? You'd like that kind of a deal. So part of that's just knowing people in the business, letting them know you're ready to move quickly. If a deal falls out, give me a call. I'd love to put it back together again for you real quick. Number 6 is a whole methodology of expired listings. This is one that I started in my career, made a lot of money on. You can subscribe to expired listings through LandVoice or RedX. There's a number of services. And you contact it because somebody had it in the market and didn't sell doesn't mean they don't really want to sell. It means they don't want to list it with that agent anymore, for sure. And so you want to reach out to expired listings is a very successful way for investors. 7, merchant builders. A merchant builder means they're not building homes for a tract, but they're building for other people, contractors. You want to network with contractors because they know who is building a house and who has to sell a house. Oftentimes people have to sell a house to move into the new one. And you can be join the spot and make an offer on that property right away. And usually they're moving because they don't want to remodel their current home, but their current home might need and be ready for a remodel. That's the main areas. I say network with other wholesalers and investors because you'll find people who'll find a deal out of their area they don't be bothered with. They might have a deal, but it's in Lancaster, Palmdale, and they live in Long Beach, or vice versa. So you're going to network with other people in the business, and they might say, hey, I can't really follow up on this deal, but maybe you can. And so that's why it's really important, I think, to really make sure people, when they meet you, know what your niche is and what you specialize in. And so when you think of that thing, they're calling you. That doesn't mean you can't do business elsewhere. And that's the big misconception. I'll just share with you guys. My marketing is all about probate, right? I'm a probate expert. But the reality is only half my deals are probate because people correctly assume if I can do a probate sale, which is difficult, I can do a regular sale. Yeah, a piece of cake for me. So you want to market yourself as an expert in something to demonstrate your expertise or your specialization. And you've got to get to where you really know an area anyhow. Most people, I'd recommend taking a particular niche of maybe 500 to 1,000 homes and mastering that area and knowing every property for sale, that sold recently, that expired, that's abandoned, really knowing that one area. So when somebody calls you, you right away know what it's worth and you can talk about it intelligently. So for most people, we tend to go too broad and not small enough on our searches.
I had a transaction with another EXP agent, and I was the listing agent. We closed the deal, but during the transaction, we had different conversations about what we do, how we do our business. And about a month later, he called me and he says, "Hey, hi." He says, "I just previewed a property for in La Habra Heights, and it looks like a property that you would use for one of your guys." And he gave me all the information. It was a for sale by owner because he was calling for sale by owners, and it was a deal that I was able to put together with my investor guy, and the property, he gave me all the details, so it worked out. But that was because we had the conversation at one point, that he remembered exactly what I did with my investor guys.
Nice. Now, what street was it on in Harbor Heights?
I can't remember the street name. It was a couple months ago.
Well, I grew up in Harbor Heights, so that's why I'm asking.
Oh yeah, it was off of Hacienda, just past the park. There's a park on the right side.
Sounds like where I grew up near. Sounds like it was near West.
They were
past the West
custom.
Road,
They
East
were
Road.
all custom homes.
Yeah. I know the area
Yeah.
well. Cute little story. I was in Florida at the Grant Cardone event. I'm talking to this guy who tells me that he grew up in La Habra Heights, of all places. Most people in LA don't even know where La Habra Heights is. And he grew up on Canola Road, which, if you know it all, it's on the east side off of, on Harbor Boulevard. I mean, it's Fortune Road going over the hill. It's off Fortune Road at the top of La Habra Heights. Well, my best friend, when I was in grade school, that's where he lived. I used to go up there all the time. So here's a guy who lives on the street that my best friend grew up on when I was a kid. Small world. Anyhow, yeah. And so that's why we say in this business, contacts equals contracts. The more people you talk to, the more money you make. And Javi, just you talking to that guy gave you a chance to get a deal. And you talk to a lot of people, you get more chances. Eventually, one will come in, you get paid on it. And so I think one of the challenges, it's one thing if you have money as an investor. You can play on your computer and you can, transfer money and make money. You could trade, I guess, cryptocurrencies or stocks or something. But finding deals, for the most part, is a people business. It's a people business to find the deals. It's a people business to negotiate and close the deals. And so don't think that, and use that business to drive you to interact with people more. On this phone call, I tell people all the time, the more you interact, the more money you make. I'm giving you a free platform here. Unmute yourself, ask a question, share something of value with the group to promote yourself so somebody else on this call might reach out to you for a deal. And I tell people all the time, I don't do this call for me alone people want to do business with me will do business with me. But you all have something to offer. You got to put it out there, though. And somebody will pick up on it and do business with you. So just know that contacts equal contracts. And whenever you're involving yourself in a networking event or a network phone call or a Zoom call like this, you want to make sure you put your information in the chat box like a few people have. And you want to make sure that you tell people what you do, what your specialized niche is. And that way they'll remember you and do business with you. There's somebody here who does stock trading. Hold Tesla for the rest of the month. I do option trades and Tesla is set to blow the month. Okay, well, look, the people who do that, there's nothing wrong with it. I'm not saying that one should not trade stocks or flip cryptocurrency. What I'm saying is that I don't believe in real estate you're gonna make money without talking to a lot of people. That I can say. Other businesses you don't have to, but in real estate, you gotta talk to people to find the deals, and you have to talk to people, I think, to get the deals closed. And yes, Paul hit it right in the head. Getting lucky, finding a deal is a result of a lot of hard work or regular focus. Yeah, I would agree with you. I would say that there are people who find a deal easily, and sometimes it's the worst thing that can happen to you because you start to believe that it's easy to find a deal and you don't do the work. I can tell you, I've met hundreds of investors or professionals who make a lot more money than I do. They all do something consistently 5 days a week, 4 days a week, consistently, over and over again. And it looks like hard work. Jason reaches out, any wholesalers or investors want to connect? So there's Jason in the chat box. If you want to participate, feel free to do that. Self-directed IRA custodian recommendations. You have several leads. Would like to hear anyone's personal experience using their IRA to invest. So there's several, I have a question from Paul, which is, do you know a good IRA company where you can use the money as self-directed to invest in real estate? You know, I've heard people mention various companies over my career. I've never had a customer personally do that. Anybody here have a customer or have personally used their self-directed IRA and use that money for real estate?
We did. We use Equity Trust. The company is called Equity Trust.
Equity Trust, great. How did you find them, by the way? I'm just curious.
In what city?
Oh, we are in Los Angeles, but the company is in Ohio.
Okay.
They're the number one self-directed IRA company in the country.
And Sherry, how did you find them?
I got referred to with a couple of investors, from a couple of investors. And
Okay,
yeah, they're doing fine. We invested with them in real estate a couple of times.
Well, but you use the IRA to invest in real estate. You're not investing in them, you're investing in the real estate, right?
Yeah. I mean, they are the custodian of actually it's solo for 1K.
Got it. Good. Well, so there's a recommendation, somebody's actually used it. I know there's several.
I use Savannah IRA and out of Florida. That's where my rep is. And I've had it on the investor side where I've done a project using another person's IRA money. And then I have it self-directed myself, both a solo K and a regular Roth self-directed.
Okay.
The third one that I've heard a lot about is Quest. So Quest, Advanta are two that are smaller, and then Equity is probably the largest one. But in terms of using IRAs for real estate, you do have to be careful because there's a couple of ways you can get kind of wrapped up around it. IRAs they're prohibited from being used for self-dealing, and it might not be obvious, but if you've got a property that's in your IRA, that's different. That's not your property. It belongs to your IRA, and you have a special tax advantage for that IRA so that you can't use that as if it were your own. So you can't mix your money. Yeah, that's actually a great resource there, the self-directed IRA handbook. But you can't mix your money with your IRA's money. You can't buy a house in your IRA and then rent it to your kid, or live in it yourself. You can't do sweat equity on a property. So when you own actual real estate, you can't get yourself into trouble with an IRA. And that's one of the reasons I like notes for and debt for IRAs, because there's no way, those are completely passive. You can't, go in and swing a hammer on a house. On a loan. You can go in and do some work on a house, and you've just blown out your IRA. And if they found out about it somehow, like if you reported, like buying material and doing the work yourself, you could have your whole IRA blown up and distributed. The money will go to you, but you lose your tax advantage because they'll distribute the whole IRA in one fell swoop, and that's a very costly exercise. So
with a penalty.
I'll put my information in the chat if you want. I've studied IRAs a lot, and I know a lot of people who use them for real estate.
I knew a company actually located in Diamond Bar of all places that used self-directed IRAs and had customers buy land in particular. And the theory was that, in real estate, the house depreciates, the land appreciates. All the appreciation is in the value of the property. Yet the land doesn't generate any income. And so an IRA could be a perfect vehicle to buy something that you're going to sit on for 10, 20 years. And if you bought land, obviously in Los Angeles, 20 years ago today, and you put in your IRA, it's going to be worth a lot more money today. And all that appreciation is in your IRA rather than paying taxes on it. The problem with IRAs is I think people get pushed to use them for inappropriate, Gary said, transactions. And the benefit of real estate so much is the tax advantages of it. So if you put in the IRA, you're kind of walking away from the tax advantages for the most part. But anyhow, thank you for sharing the information of the companies. And Sherry, thank you for stepping in and sharing the reference. It's always good to have.
Bill, I would say that's another advantage of using IRA notes in IRAs, is that with real property, you get a lot of tax advantages from depreciation and whatnot. Whereas you don't get that when you're holding notes. It's completely passive income, but you don't get that write-off. So having them in an IRA is an excellent way to shield yourself from that.
Yeah, plus notes you don't have control over for the most part when you get paid. People can prepay early, or you might refinance it because it makes sense, but now you don't have the same timing control. With IRA, you don't care as much because you're deferring the taxes anyhow until you start withdrawing. So IRAs make good sense, I think, for note income and for land. I just don't know that for investment property. And then people tell you to do it for your own house. I get if you're short down payment money, it's tempting to tap into it, but for the most part, just be very careful using that. But Gary, thank you for offering that. Good. Okay, good. So any other questions, challenges, problems? That's all I really had to cover was where to find deals and then kind of how to focus on getting the deals. That was really what I want to get across today. Any questions on that? How to find a deal, how important the deal is in the process, or anything else with real estate we can help you guys with today? Raise your hand.
Could you just read quickly through the second list, Bill? I didn't get all of the items.
How to find deals?
Yeah.
So the first thing you said, point one was, it's not really how to find it, but look and underwrite 2 deals a day.
Okay.
Now, what happens is over time, as you talk to people, more people will email you deals. I get people sending me stuff all the time, which is great. So they go in a certain mail folder, and I'll go through and I'll look at them. But I look at my deals on the MLS. I'm an agent. That's my focus. But he said, number one is look and underwrite 2 deals a day, meaning people send you 2 deals. Now run through and figure out how would you make money on it, because you can't make money on it unless you figure out how to get into it and get out of it and make a profit somewhere along the way. Second is third-party resources, and he listed LoopNet, CoStar, which you have to subscribe to, Reonomy, you have to subscribe to, MLS. Agents have that. You can find an agent who will create a search for you. I have investors who tell me, well, this is what I'm looking for. This area, this size, this characteristic. I put that in the MLS search, and they get emailed when those properties hit, and I get an email saying, Joe Smith search criteria, and I see that one came up, and I'll call them on that. So you can work with a real estate agent to find your criteria property. For units, he mentioned NHMC, which is like a national listing of units. So that was 2. Number 3 was watching sold properties. Seeing properties that sell will help prompt you to find other deals. You'll see something that sold and realize, wow, that guy bought that. Why? Well, since he bought that, there might be other properties like it that you're going to look for. He said 4, you can search by public records for certain property characteristics, lot size, property size, bedroom, bathroom count in certain areas. I know there are people like that want to add an ADU to a property. They want to add a bedroom and a bathroom. So you can pull all of the 2-bedroom, 1-bath on lots bigger than 5,000 square feet in a certain zip code, something like that. Number 5, look at deals that are under contract. Why? Because they fall out. So look at deals that are under contract and talk to people who have involved with deals under contract. Talk to the escrow, title, lender. Make sure if the deal fits your criteria, if it falls out, they call you first. And you tell them that's exactly what I'm looking for. And if that falls out, let me know. Number 6, expired listings. Expired in the multiple listing service that you have to subscribe to or get an agent to help you with that. 7 is builders. And the term he uses, merchant builders, people who build houses for other people, not Toll Brothers or one of those KB Homes, but a company that builds homes. Usually the home they're building is for somebody who owns another home that they're gonna have to sell. And then, yeah, that was the areas that he gave. The other ones don't really apply to what we talk about. He was saying commercial brokers and funds with deadlines and disposition managers. Those will all be for commercial properties. So again, you want to get deal flow. You want deals coming to you. Either you're in a pitch session on deals, or people are emailing you their lists, or we talk about Facebook groups that have property deals. And you want to try to find 2 deals a day and run the numbers and see if they fit. You always want to have 1 deal in your pocket you can present to somebody. Okay? And then here's somebody, anybody who wants to email me deals at lejason66@gmail.com. Good. So this me wants more emails, more email deals. I'm fine. People tell me all the time, you can email your deals. Yeah, email me everything you want. I'll just create a little rule so it goes in the folder. But yeah, I love looking at real estate deals. So any other questions on where to find deals or how to find them or how to underwrite them?
I had a question on something else. Is it fine, Bill?
Go ahead, Angie. For you, it's okay.
Okay. I just wanted to know if you can help me figure out the difference of a voluntary and involuntary lien for the real estate principles course.
I used to teach real estate principles, or I guess a license school I ran. So voluntary means by definition, something that you want to do. Like you go to the bank and get a loan, and to protect their interest, they put a lien on your property. So they get paid back. You can't sell the house without them getting paid. Or you make a settlement, you owe somebody money, and you say, okay, I owe you $100,000, I don't have it, I'll put a lien on the property, and then when I pay you, we'll take it off. Versus an involuntary lien is something that somebody puts on your property that you don't want. If you don't pay your taxes, the county puts a lien on your property. If you lose a lawsuit, somebody could put a lien on your property so that they can collect from the equity of your property. So voluntary means you go and do it yourself, most commonly for loans or sharing equity. And involuntary means that it was against your will, but they had the power to do it, usually the government or somebody who wins a lawsuit.
Yeah, okay. Thank you so much. I was thinking it was pretty much common sense, but I just wanted to make sure. I appreciate that, Bill.
Right. Well, common sense isn't common, Angie.
Bill,
Yeah, true. That's right, because everyone's common sense isn't the same. So yeah, let me correct
Exactly.
that. You're right. I did learn about that. Cannot
That's
say
the
that.
time.
Can I add in on the California real estate exam test, you can simply, like, you may know this, but just Google difference between voluntary and involuntary lien in California, and always put it in California, and you usually get the answers when you're writing them out. But that's a broker cheat sheet on that one.
Thank you so much, ma'am. I'll make sure to add that. I appreciate that.
Yeah, whenever you're doing the quizzes on online learning, you definitely would have another computer nearby to Google the questions, because I think that, as long as you're writing the answers, I think that's fine. But that's funny that you say that. I've done that. I'll admit it. I took my broker's test. It's really funny to me.
California or the state you're looking in, or you might get a different answer.
Yeah,
so
for sure.
True.
Bill, I had a quick
So thank you,
question.
guys.
Sure. Who's that with the question?
It's Roslyn. I just wanted to let you guys know a friend of mine has a realty outlet, and she's looking for a couple realtors. So if anybody's looking to find a place to work out of, I know a realtor who's looking to add a couple realtors who've got some experience. So just send me a message in the chat and I'll connect you to a lady. Her name is Randy Saunders. She's in my BNI group.
Oh, great. Where is she located?
She's located in the Valley.
Located in the Valley. Very nice. You want to join a real estate office in the Valley? Chat to Rosalind. And Rosalind, I had a nice little chat on my YouTube channel. If you want to learn more, she has a service that helps. It's good for real estate agents. It's a way to give service to your buyers when they move into a new property. So if you're interested in that, see on my YouTube channel, you'll see the interview that we did together. That was kind of fun, Rosalind.
Yeah, thank you so much.
Sure. Good. Who else has a question I can help with today? Anybody? You guys know everything? No?
Hey, Bill, this is Paul. Thanks for your assistance. So that probate list, I guess, what day does that come out? Should I be looking for that in my email inbox?
I'm sorry, which probate list are you referring to?
Well, maybe I misunderstood. Isn't there something that you send out by email, like a regular recurring list?
So I do a curated list of probate properties coming for sale in LA County with investors that I've met. I don't, so I'd be glad to talk to you about that offline. Have we met before?
Yeah, the at Grant's event last week.
Oh,
This is
yeah,
Paul.
yeah.
That's why I was mentioning the thing about Grant's event with the COVID notification as well, since several of us were there in the room with 2,000 people.
Got it. You know, Paul, I don't know that I have your email handy and your phone. If you could text me or email me, I'll
Sure.
add you to my list. And remind me, where do you live? What area?
In Gardena right now, and we're
Nice.
open to, and I have a place in Hawthorne as well, but open to the area. It's funny you were saying La Habra Heights. I'm actually interested in Ladera Heights,
Yes.
which is closer to Santa Monica, but a little less expensive.
Not necessarily. You know, Ladera is red hot.
Yeah.
Because I think it's so close to the airport and jobs, and for a lot of reasons.
And the view.
The view, if you have a view there, it's just phenomenal. Yeah. So La Habra Heights has good views as well. And I remember being in houses. La Habra Heights had views all the way to Catalina Island over all of Orange County with phenomenal views. But yeah. So yeah, send me information, Paul, and I'll be glad to add you to my list of probate properties.
Okay. Yeah. Actually,
Yes.
we've exchanged emails. I know it's in your massive emails, but I'll send another reminder. Thank you.
Yeah, you know, I don't remember things very well, but let me see here real quick. Do I have you?
Yeah. So I set up one for PH10X now at Gmail.
Oh, nice.
Yeah. So it's my initials 10X now PH.
There you are. Okay, good. I got it. Let me add you to my list. Okay, cool. I'll take care of that. Good. Any other questions, challenges, problems? Oh, there you are. I see you signed up for this event. There's your information right there. Got it. Perfect. Anybody else have any questions, challenges that I can help with? Not hearing you. We're at the end of the hour here now. Chantel? No? Chantel has a little helper there. Okay. So no, not hearing any. Hey, it's 3:52, so I'm going to wrap up here. Thank you for being on the call today. We do this every Tuesday, 3 o'clock on real estate investing, realestateinvestingzoom.com. And Thursday at 4 o'clock, I go deep on probate, probateweekly.com. That's Thursday at 4 p.m. Pacific time, 7 p.m. Eastern time. All this is live streamed on YouTube and Facebook. And if you register, we'll send you the link to the recording afterwards. So thank you all for participating today. I really appreciate your help. Gary Payroll, thanks for your help. And Andrews, nice to see you. Rosalind, always great. And I know, Angela, you helped us. Thank you. Catalina,
Bill.
good to see you. Yes.
Before we get up, I thought you said last week that today we were going to have a guest speaker. Did that change or did I miss that?
I don't know. That's a good point. Did I say we had a guest speaker today? Is that you? No.
And I think
No.
are we going to do something next week?
I have you for next week.
Okay.
Talk about notes. So yeah, next week we're going to talk about notes, and Professor Cashman is going to share some of his one of his key strategies on investing in notes, something that anybody here has a chance to do. And the idea is a way to create a sale where there might not be a sale otherwise by using notes to do that. So thank you for reminding me on that.
Cool.
Good. Okay, guys. Hey, thank you. Have a powerful week. If I can help you, text, email, or call me, and make it a great week. All the best. 10X.
Thank you. Thank you.
Thanks, Bill.
Thanks so much. Thanks, everybody.